crisis impact global security. And therefore, as a post-note to my lecture, I would try very briefly to address it. It's interesting, as I mentioned a moment or two ago, that in one of the European Union papers on the resolution and liquidation of cross-border entities, the words crisis management were used. And that is, of course, very reminiscent of crisis management being used in hard security discussions. Equally, I remember during the weekend when Lehman's was trembling on the brink of collapse in September 2008, and I felt that nothing was certain about the future and that almost everything was uncertain, recalling the last time I'd felt in a similar situation was in October 1962 during the Cuban Missile Crisis. We have seen the potentially devastating effects of unregulated financial system. But there's no doubt that financial crises, both over banking and indeed over sovereign debt, have put strains on political relations between countries. I referred already to the clashes between Iceland and the UK and Netherlands, but equally during the last 2 months, reading the Greek and the German press, one has seen some fairly sharp comments of one about the other. And today's New York Times contains a powerful article by Stephen Erlanger, writing from Paris, on serious strains between France and Germany, the traditional motors of the European Unions, on the way to resolve the Greek debt crisis. So that these matters do have some effect upon political relationships between states. Similarly, in the discussions in recent months over the European Union measures to control hedge funds, most of which are managed in London or New York, there's been rather tense exchanges not only between Secretary Geithner and Commissioner Barnier, the member of the Commission responsible for regulation of the financial institutions, with accusations from Washington of looming protectionism, but also across the Channel with all UK political parties opposing the existing proposals. More seriously, there is a risk that economic recession following the financial crisis can influence public and political opinion against globalism and lead to introverted policies. The positive side to this is that the last 2 years have seen some developments of what I would refer to as effective multilateralism, the creation of new global or quasi-global institutions, the G20 to which I've referred, the fact that they have brought together the Financial Stability Board, which is looking for global solutions to these problems, and therefore the contribution to global security must be seen as encouraging. I should be very glad to take any comments or questions if people have questions or comments. Yes, please.
I was wondering, the FSA, the Financial Services Authority of the United Kingdom, has originally promoted principles-based regulation.
Yes.
And it seemed to me that there's a different view that says principles-based regulation is very important in areas where you cannot yet agree on rules-based regulation, but it should be the goal to have rules-based regulation to the extent possible.
Yes.
Because principles-based operation, in a sense, is a very broad net that interprets current needs, intentions, and various other things, but most of all has proved itself to be not used consistently as the crisis is approaching. We have example after example, both from the United States and the United Kingdom, where the regulators saw evil coming but did not speak up, did not intervene in a timely manner, because they said anything they would do would be misunderstood, would precipitate the crisis, would expose their own careers to slander and ruin, and the result was ineffective governance. Now, would you say that the I couldn't quite, the reason I'm asking this question is I didn't quite manage to parse where you come out in this discussion. You know, I can see of, let's say, the real estate market. If the real estate prices, the United States, the Case-Shiller Index, you know, rises by more than so much year after year, there ought to be a point where you raise, you lower loan value ratio or origination or something. Do something on that that provides a cushion of security. So that you can think of mechanisms that will do that. But I wasn't sure where you came out between the principles and the rules-based approaches to regulation.
I think that one ought to move where one can to rules-based. But I think also what has come out, and I didn't discuss because in one lecture one can't, is that there is rather, we have been on the whole regulating too much at a micro level, or supervising rather too much at a micro level, and one wants to have rather more macro-prudential regulation, which actually does see some of these other larger things coming along. And because this can be taken by people who are probably at a rather more senior level, they can act. But then I think that also means that I did say that I do think that central banks, I mean, I happen to feel that there was a mistake in that they were not prepared to lean against certain developments. And there one does get the impression that there has been some learning, from experience, and that it's no longer, that you must on some occasion be prepared to take away the punch bowl. And I think that that is the way in which we ought to see the development, and where there is some evidence from some of the sort of writings which we've had from people, both from Adair Turner in his comments and indeed from people in the Bank of England, that whether we restructure regulation, the Conservatives have suggested that perhaps it should all go back into the Bank of England, but nonetheless whoever's going to do it do seem to be moving to a rather more activist approach than we saw during the Great Complacency.
Thank you. I was just wondering if maybe you thought that it could be as simple as the age-old principal-agent relationship problem, where the CEO is also the chairman of the board, and they're not checking each other appropriately, and they're issuing stock that is restricted, that yields higher returns, but doesn't allow you to have a vote as far as corporate relationships. It just seems like a lot of these corporations, not just banks, whenever they make a quick profit, they'll pull the capital out of the bank in terms as bonuses instead of reinvesting, because they don't really have much skin in the game.
Well, I didn't discuss the question of remuneration and the ways in which one could ensure that the actors in these bodies were taking their responsibilities more seriously. I do believe that that is areas which certainly should be explored, and there have obviously been discussions both in the G20 and elsewhere. But I think that sometimes there has been a tendency to spend more attention upon bonuses, and there is a slight populist tendencies of thinking that bonuses are what one should go for, whereas I think one really wants to look more seriously at some of the more fundamental reforms. And there's a danger, I think sometimes, in the same way as, for instance, on the continent of Europe, there's a sort of great paranoia about what hedge funds could or could not do, and given too much weight to the assumption that they are really having a very negative effect, where it's very difficult to show that they had a significant effect in terms of the the financial crisis. So that I think that, yes, you're right, and I think we should try and ensure that there is more responsibility within firms. There ought to also, and again, that is one of the arguments, I think, which is developed, and I quoted from Andy Haldane, who is really very concerned that in these very large and complex institutions, people are not really clear of what is happening, and that indeed it is therefore in small institutions that you're more likely to have greater responsibility. And of course, the question of reducing size is something which was argued by the President and Paul Volcker as well, and indeed is, I think, implicit, at least in the House's variation of the legislation. I'm not quite sure how far it is at this stage in the Senate, in Senator Dodd's version. David.
As a politician, do you had some experience in trying to balance ideal solutions with popular expectations and so forth? What I would like to at least try to give some feeling for is how does one deal with what is very, very clearly popular rap and still get the kind of reforms which are necessary, which are fairly complex reforms?
Well, I think that quite clearly, you know, both in this country and in the UK, when the sort of bonuses which have been paid out even more recently by banks, there has been very great indignation in the UK. There has been a taxation introduced, but then that hasn't made very much difference because the bonuses have just been increased so that the net effect isn't very different. So it's quite difficult to pin these things down. But I think that part of the problem is one which I tried to touch on, is one of the reasons why it is quite difficult to get satisfactory models is because of the differences in the culture of banking and of the structure of banking in different jurisdictions. Whereas, in fact, the concept of a sort of model which would be either Glass-Steagall or Glass-Steagall-Knight, or the distinction between investment banking and current account and then banking in the normal sense, is something which is understood in the US and the UK and in some other countries, in Canada for instance, which was very well regulated and of course had very little difficulties. It's very, I mean, if one wants to look at the way as to how one ought to regulate, look at Canada. Canada had hardly any difficulties, and I haven't spent enough time studying it, but I think it is a very interesting example. But I think that on the other hand, you see, we do have in Europe countries like Germany and France and Switzerland, where they have always had large universal banks. And therefore, if you were, how one is able to move to a structural solution, either the sort which I quoted from, well, even Volcker's rule, is really quite difficult to see at an international level. And if you cannot find a common arrangement, then there's always the problem of banks going to the place where they can get away with things. You'll remember when the report came out on Lehman Brothers, they had gone to London to get an agreement by a lawyer on one kind of 105 repo. Going back even further, the whole of the growth of the City of London in the 1960s and the 70s were because, in fact, because of Glass-Steagall operating in the United States, stuff came to London to use the Eurobond and the Eurodollar market. So there's always been this risk, and indeed similarly with AIG, who carried out a great deal of their activities because the regulatory conditions were different in the UK compared with the US. And therefore this problem of trying to find universal solutions, and that is why obviously the work in the Financial Standards Board is very important. But the difficulties are that the structural reforms, which intellectually I believe are necessary, practically I see as being extremely difficult to implement because of the differences in banking arrangements in different parts of even the developed world. Yes?
To what extent do you feel that some of the structural reforms, like making them smaller,
Yeah.
reducing the leverage, to what extent do you think that still doesn't solve the problem so long as you allow these really complex financial instruments, where it seems this is built on these mathematical models that people can't really even comprehend? And at least some of the literature I've seen, or discourse in the United States, is talking about the problems of just the sheer complexity of the financial instruments themselves. And that, from a complex systems perspective, it introduces a whole other level of unpredictability. And instead these other structural reforms don't address. I'm just wondering to the extent that these other
Well,
structural reforms are done if you don't
I
deal
mean,
with the complex instruments.
one of the dimensions of complexity was the creation of shadow banking arrangements of various sorts, and I believe that one ought to be able to find ways in which that becomes apparent. I mean, there was a, I think that is where supervisors really ought to be able to be more effective than they have been, although I agree that if one looks at the US experience, one had large numbers of supervisors crawling all over Lehman Brothers and apparently were not able to catch things. But it is, similarly, I think that, and I didn't discuss it in any detail, but there are obviously quite a lot of proposals to deal with derivatives and some of those particular sets of interest. The idea that there should be central clearing, so there is a good deal more transparency of what is going on, seems to me to be necessary. There's a great deal of pressure in some countries in Europe that we should no longer have naked CDSs. The idea of perhaps being able to insure against something which you don't have any responsibility for is being thought to be, in general, immoral. I don't think it necessarily is, but nonetheless, I suspect there will be pressure to remove that. But similarly, I think that it is very difficult, given the number of people with rocket scientists who've moved into this business, to know quite how one is going to be able to unscramble it all very quickly. But I think that the quality, the only thing which I can say, is that my impression and what one has learnt from discussions with the people who are developing and improving the regulatory arrangements in the UK and the supervisory arrangements in the UK suggests that a good deal more attention. One would like to think that people have learned something, and whether it will be enough to be able to deal with what will continue to have some dimensions, but smaller banks on the whole less complex. But how far you have to really shrink them before they do get to a size where they're not going to create problems, I'm not sure. I mean, that is, as I always say when I don't know the answer, that's a very good question. Yes, please.
Just kind of in the same vein, do you think that any of the demand for sort of the Glass-Steagall 2.0, if you want to call it that, comes from the populist outrage that happened as a result of the crisis? Or do you think that that's kind of the one extreme of it, and then maybe like the Glass-Steagall light was talked about, the regulation of proprietary trading and sort of hedge fund activities? Do you think that with the addition of like the Basel agreement or the limitations on leverage, the capital controls, would be an adequate enough solution? Do you think it really is necessary to break apart the banks as is kind of being suggested by Volcker and that board? Do you think?
Yeah, I think that, I mean, in real world life, the narrow bank model is wonderful but not practical. The Governor of the Bank of England talks about the need to have a three-legged stool. And he would say that you both need to do things, as it were, on capital, on leverage, on liquidity, and particularly probably having perhaps different capital requirements for different books, for different sorts of activities, so that if you did permit the continual to be some form of proprietary trading, then there would have to be there might be a higher capital ratio on that than there would be on other things. The other thing, so that is I think that one would want to see an attempt to move, because of course the Volcker plan wasn't something which suddenly appeared on January the 21st. I mean, if you look at the report of the Group of 30, which Paul Volcker had been working on for about a year, I think, before that had really had a lot of bankers from different parts of the world working through. Now, so I would hope, and indeed Secretary Geithner's article in the Washington Post today suggested that some of things were moving in this direction. I hope they are. What worries me is that although in the UK, as I suggested, both the FSA and the Bank of England are in favour of moving in that direction. The present government is not, and has, I suspect, been lent on too much by the City. And I think this shows you the political problems of moving to sensible solutions. But I mean, sorry, the third leg of the stool, which I discussed, is in fact resolution arrangements. I mean, working out so that one does have, in the situation where a bank is getting into a situation, that you you have prepared in advance, that you have these living wills, that you do understand. And I think that is at least one of the arguments which might begin to unpack some of the complexity. Because if you have to explain to how you're going to be able to wind down, you would at that same time have to explain what you're doing to yourselves, and that would actually probably be a good thing. Yes?
Sorry. You mentioned it earlier about the winding down, the body who actually will oversee that. You kind of mentioned the European model that they're...
Well, the European Commission has put forward a proposal to see whether there could be a European resolution authority, but this is very difficult because governments, they feel, the British government in particular, resists this on the grounds that if you did have a European resolution authority, you would be taking some responsibility to pay for this body. And on the whole, they feel that that should not be the case. But that is why they would say, and it is very much the view of the bank and of the regulator, they would like to see, when you do have an international bank, that they have subsidiaries in the other countries, so that there is a separate unit rather than a branch. And that, I think, would help to some extent in terms of the cross-border problem.
So that it would be invested into
Yes.
its own
Yeah. Yes.
Let me go back. My problem wasn't really with the populist thing and the bonuses.
Yeah.
It's more of a, as an ex-banker, a lot of my small business customers wouldn't pay themselves a salary. They would leave a lot of the profits in the business
Sure.
to continue to grow.
Yeah.
What I'm talking about is once companies get so big that they start to incorporate in Delaware with looser tax laws or offshore, they kind of lose sight of the incentives to grow the business as a sustainable instrument, and they begin to just, take what they can when they can and save themselves. So I'm just wondering if it doesn't need to be as complex as regulating and everything, but for people who are owners in a business and stockholders, to actually take take control, show up at the board meeting, and not let the top guys take everything, like in a credit union.
Obviously, the more attention that was paid in this way, the better. And there is some of these ideas in which some of the debt in a bank would be converted in some circumstances to equity if it was getting into difficulties, so that there would, but all I'm saying is, I think that we are going, it would be good to do what you have suggested. What I think is, how does one create incentives to ensure that that sort of activity is taken, rather than the incentive at the moment, which seem to run in other directions? What are the actions which should be taken? I would be very interested to know the answers to that. I don't. Well, thank you very much indeed. Can I just say, finally, that David Albright did me a great good turn in asking me to address this subject, because I have had to spend rather more time than I expected teaching myself quite a lot about it in the last 4 months. And fortunately, there's been enough going on to make sure that I have had a chance to learn. But I would admit that I am very much an amateur in these fields. But I am very grateful that we've had such a useful discussion. And I do think there's some very real problems, because just to go back to these are issues which really do affect global security and global stability. And that cost of 6,200 trillion euros, the pound, I don't know which euro it was, anyway, whatever it is, such amount, real cost to the global economy of having had a financial crisis, of having such a downturn, does suggest that this is a task that those working in academia, those working in politics, those working in financial institutions all have a common responsibility to try and find a more effective system. But thank you all very much indeed. I very much enjoyed it.